What up, traders? What up, investors? Ken here from the Dyslexic Investor. I know it's been a while, but let's just kind of jump into some charts. What I'm saying here is, again, just my thoughts, my opinions. Please just take them to your account, and please do your own due diligence and research before investing into any of these kind of products, especially in the financial markets, because things can change, new information can come out, all that kind of fun stuff. But as you can see, I have my fantastic everything is fine scenario where basically I'm telling everyone, let's not pop the bottles of champagne yet. Let's not bring out the caviar or the mozzarella sticks, whatever you're into. We want to kind of maybe just take a breath here, reconvene, figuring out what we're currently looking at, zooming out on the overall picture of everything. And we're just going to go through a couple charts. We're going to go through S&P 500, NASDAQ, TLT, some other like handful of stocks, could be like Tesla, Amazon, look at some energy sectors, especially with XLE and all that kind of fun stuff. So let's go ahead and jump right into everything here. Jumping into the fantastic Thinkorswim charts here. Let me get my ugly mug out of the way here so we can kind of just jump in here. Looking here at the NASDAQ. So NASDAQ, the QQQs, technology sector, all things going to the moon, right? Right? Okay, so again, if you haven't watched for a while, this is again, we're on the weekly side and we're going back 5 years, okay? So just be mindful about that. So coming into this section here, this is what I'm saying, we're still in a downward trend, ladies and gentlemen. Whatever the way you draw your lines, you can draw them like this, you can draw them like that. It's still a downward trend, and anyone that has any kind of technical analysis or has done any kind of work this is still a downward trend, okay? We're chopping a little bit, which is good. So what a lot of people are looking at is like, hey, are we going to be breaking this base right here? Are we going to break that basically support here, looking at the QQQs, which is basically around like 280 here in that range. Let's kind of do a quick little zoom in to kind of look at it just a little bit closer here. So again, what do I mean that we're continuously still kind of like in this like trend here, right? Again, drawing those lines here, basically like that. Not really seeing too much of a bounce. We're seeing a bounce again just on Friday of like 2%. Everyone's like, yay, everything's back in play. Let's go. No, I'm a little hesitant here. Again, what do I mean by that? I'm not trying to be a negative Nancy here I'm a bull, okay? I'm an optimistic. I like long positions. Let's go. But you got to be careful. Looking at some particular lines here, I kind of leveled off some of the Fibonacci retracements on only calculating the more important ones. And what we're really coming into play is we're really far off a lot of these fibs here. But we're coming into play here, if we zoom back out, this white dotted line is the 55 EMA. And then this green line is the 144. Again, those are two fib numbers as well. They're not your standard 50 or 200 EMAs or SMAs. They're EMAs, so they're also with the fib numbers as well. As you've seen here, prior to these moves here, again, with the old COVID, that was a bounce there. And this was, again, that little downward tick that we saw the Fed trying to raise rates way back when in 18 into 19. We had a nice little kick there as well. So that was, again, that 144 EMA has been pretty spot on every once in a while. Again, a clock is right twice a day or whatever the stupid saying says. That being said, that 144 EMA has been just a chop fest. It has been looking like my heart rate when I walk into McDonald's juicing about a delicious burger. Just joking. More of a Five Guys, and actually make my own burgers at home. We got a fantastic place right down the street here that makes wonderful burgers. Okay, getting back to the charts here, looking at, again, this kind of levels here. Again, this is chop. This is still a downward trend because depending how you cut it, how you slice it, how do you like it on the side, it's still a downward trend. We're not seeing the momentum kind of break back up. We still have the very short dated moving averages, again, like the 21, the 8 EMA, the 34, still below the 55. They're not all below the 144 EMA, which is fine, but let's do the daily chart. This is where it tells a little bit more of a better story here. So this is a daily chart. Clearly see that, again, that declines from November of last year, and it's just been a roller coaster down. And each time, ladies and gentlemen, you can see here we think that we're on a bull rally, right? It is a bull rally in a short term, but it's a bull rally in a downward trend market. So they are very viciously they go up very fast, very they're very not vulgar, but they're very aggressive to the upward side, and then they are, again, they capitulate and they just come back down even worse. So as things change in the market, as the Fed really said much of anything new that the market has to counter looked at, we had the Fed come out just this past week talking about like fighting inflation, and of course with employment as well. The job market is currently really well priced, but again, looking for some CPI numbers to potentially come down in the next coming weeks. So this is, again, potentially a play on the inflation side. So again, this bull market rip higher, bada boom, bada bang, and then down lower. But here's a but, like a peach butt. This kind of hasn't broke this line here yet. So that is, it's different. It's different. So this has not broken this 280 line here. All right. So that's good. And it's kind of making a little pop up higher, a little jump rope, as you can say. My concern here is that we potentially, with retracing for certain levels, we can potentially run up to like 320, and 320 to like 330. That's going to be a little bit of a hard zone to potentially break out. So I'm going to draw a fantastic box of purgatory here on this area, on potentially highlighting, hey, we could run up to this zone, but we could be getting into some little bit of trouble there. So that's what I'm looking at, again, on the QQQ. It's kind of so pretty much the same setup within, why isn't it typing? SPY, again, same kind of scenario. We had these bounce higher. It's still showing somewhat of a downward trend here. We're still in a downward trend here, popping up higher. So for the overall S&P 500, we're looking for, again, S&P 500 has been a little bit stronger. So I think it could potentially go up to 430 to 420. In that range here, potentially, if all things go well. And something crazy doesn't happen in Ukraine, or the Fed decides to change something, whatever. It could be a lot of different scenarios that we could see that range kind of come in here. So we're going to draw that fantastic box up in that range to kind of highlight that zone. And then let's look at some XLE. So this is a stock, or this is an ETF that is basically all energy. So this is a really good tell here. That we can see here. Oh, let me go to the weekly chart first, not monthly, my big hands. All right, so XLE, as you can see, has come down dramatically and has bounced off that 55 EMA and kind of made a nice little slingshot higher. But at the same time, we're seeing a little bit less volume here. So again, the volume is down here at this range here, less volume on that bounce. So that doesn't mean it's going to fail. It just means it's just seeing less volume. And it's really getting like somewhat of a line here, or basically around 82.50, to really see a potential line in the sand that needs the bulls if they're long on energy, with the energy crisis that's potentially going to be happening with nat gas prices, especially in Europe and Germany, with the pipeline from Russia, Nord Stream, being basically, they lost the keys or something like that, and they can't find out on how to turn it back on. I don't know. The Russians were doing something with the keys or something. They lost it. Boris dropped it in the sea or something like that. On that front, so again, this thing again, guess what? XLE is above the 55 EMA. It's above the 144 EMA. It's above the 34. It's above the 21. Like, this is a more positive looking chart than if you're going to be a bull than anything else. Going to the daily side, it's a little bit it's staggering. In the short term, we can do a fib here. We are failing here basically at that 618. didn't have enough potential to go up to 87 here. Looking for maybe another test around to 82 to 84. If that can't hold, we're going to be going to the downside, potentially breaking below 77 to potentially even down to 75 with XLE. But that's being said, be mindful about that on how that plays out. Again, basically the flip side of markets go higher, usually XLE does the complete opposite. Let's go look at some handful of stocks. Of course, a lot of people love the Tesla. Tesla has made a nice little ricochet higher here. Again, if you don't know, I'm a huge Tesla bull. It is a very volatile stock. It's something you don't want to invest your whole account in, which sometimes I have. But anyways, with that being said, let's zoom out to the weekly charts first. Very choppy. Again, they had their split a couple weeks ago now, I think it has been. Yeah, a couple weeks ago. Didn't go to the moon like some people projected. Like, it's going to 1,000, ladies and gentlemen. Let's go. No, sadly, markets have changed, ladies and gentlemen. It is no longer throw money into the fire and just wasting money and being able to magically turn that money from ashes into wine or whatever the book said, and then making it jump higher here. Tesla, very choppy, extremely choppy. I can't honestly highlight that enough. This thing is choppy. I talked about earlier when I go up to my burger place and get a milkshake and some fries, it's like my heart rate's jumping up and down. So excitement. That's basically what Tesla stock is here. It has not been too much of a nice trend, to say the least. But on the flip side, it's above the 144 EMA. It's above the 55 EMA. So that is a positive note. And again, this area down here below that 240-ish range to 220, there's a lot of buyers down there. There's a lot of buyers that came in that really bought this up. Again, with strong earnings coming out, I believe, sometime in October potentially. And again, if you know anything about me, I've watched the channel for more than 5 minutes, earnings is a coin flip. So if earnings just come out, we could be seeing a huge pump higher if it's great and so forth. But on the flip side, just be very careful with Tesla. What are a couple other ones that people always like to see is Amazon as well. Amazon, talking about being in purgatory for a little bit. This thing is not trading very well. Again, this is one that has not been able to kind of get out of its own way here, especially on the weekly side. You can kind of see the pattern playing out here of not seeing it to bounce back higher here. It is below the 144. It's below the 155 EMA as well on the weekly side. It's trying to make its comeback. It also had a split. On that split, it did actually terrible. Like, it just did terrible. And with the high spend on investing in a lot of things for Amazon and the higher of just labor cost, it's just been astronomical to them. But if you know anything about Amazon over the past 20 years, once they get this initial investment of stuff and move the cards in certain directions, they can basically just turn the money printer on and it can just go brrr. You know what it means. In the short term, very choppy here. Again, it's definitely a lot of support, a lot of buyers around that 110 to 115 range. If it does come down there, honestly, I will be buying and purchasing some leaps on Amazon and selling calls against it. But that being said, it has not been able to get back above like 141 to 142-ish range, which we would really see kind of break out. But again, if it can get some momentum and the overall market can kind of carry it, I think it'd easily jump to 155 soon. But again, at the same time, you have to be very mindful that, hey, we are in September and October are notorious, very volatile months. So just be mindful about that as well. TLT, this has not been a fun one for sure. If you're a bull, if you're a bear, kudos to you. High five, slap. This has been, talk about a downward trend. The 8, 21, 34, 55, and 144 are both printing lower and lower and lower. At the same time, we're potentially have a double bottom here. But if this floor doesn't hold, which it doesn't look like it might, depending on the circumstances and so forth, this thing can easily crack and go way below $100. Again, if you're not too familiar with TLT, this is the 20-year bond treasury notes, so just be mindful about that. Another one that we could take a looky-loo is Google. So Google is one that I find very interesting. I actually kind of like it. That's why you have this box of purgatory for me here. I've highlighted this to kind of be like, hey, I like this range here. If it can stay in this range here, I'm just selling iron condors right now on Google. It's got like a nice high IV, implied volatility, and just selling premium currently in a lot of these positions. Potentially for a bounce higher here again, what this box of purgatory means, we're looking for it to stay between 105 to 120 basically, and just kind of bouncing around here. Once we start heading closer to earnings and get an official earnings date, that purgatory box could expand dramatically depending on what they say. And let's go to one last one. Of course, the GOAT of all investments, Apple, the largest company in the world per se, if you're not considered the Middle East and Gulf, whatever the company's called, the oil company. So Apple, insane. What company has done so well? Again, whatever you can think about the Ultra Watch or whatever the heck that is, they can go scuba diving and climb a mountain at the same time kind of scenario. This is playing out fairly well in the short term for Apple. If Apple can stay above the 55 EMA here, which was some positive momentum, more bulls coming in here to play, 150-ish, it's going to be your short-term level support, more stronger support around 140 here. But if this thing can pop, we can easily see this run up to 171 for a bounce. And that's going to be coming into some wall of resistance at that 171 range because we're seeing those potential top candles there failing here. So potentially in the next 2 to 3 weeks, we could see a run up to 171 there. So on that note, thank you everyone for coming by, stopping by, listening to me speak about cheeseburgers, French fries, and milkshakes, and of course stocks. Greatly appreciate it. If you haven't already, check out the Discord, and I'll catch you guys on the flip side. Peace.